and welcome to the Stock Planner channel. Today, I'd like to talk about 5 energy stocks that you should add to your watch list. The energy sector has been really been hot. In fact, for most of this recession, the last 2 months, the energy sector has led the way. What I'll be doing in this video is showing you my energy sector watch lists. I'll be showing you my current trade list, which I'm trading Exxon Mobil, and I wish to add some more to Exxon Mobil. I'll show you what I expect to get out of the trade, and at the end of this video, perhaps you'll consider at least having a watch list of 4 or 5 stocks, perhaps some of the ones I talked about today, and you'll be trading in a sector that has a high probability of success. I'm a swing trader. I'm looking for reversals. I'm not finding one in energy, but I want to get into it anyway. Why am I trading this sector or stock? Why am I trading energy? Well, because since the Ukrainian war and our fiscal policies, gas prices have increased over the last year and a half, and it's not likely to stop anytime soon. Currently, I'm trading only one stock. I was trading 2 stocks before, Chevron and Exxon Mobil, but I think I want to add more to my Exxon Mobil position because I just started it. It's called scaling in. Now, I have a watch list of all my stocks on Discord. It's in my free area. Looking at the big picture, we have the Ukrainian war and the energy prices have been going up. We have supply chain issues. We have inflation. A recession is looming. And politics has seemed to be getting in the way, especially in the Ukrainian war. Politics is going to affect the economy until 2023. And of course, the Fed is always out there causing some issues. All these issues rolled into it together have created a perfect condition for energy costs to increase. In fact, everything is costing more. So this is going to be changed anytime soon? Are we going to see an improvement in our economy anytime soon? I don't think so. Let's take a look at what FinViz has to say. FinViz is a go-to tool that a lot of traders, especially single traders, go to. And we can see that we had an up day on Friday. Lots of green, but this recession is not over. Looking at groups, we're looking for energy on the groups. And there it is towards the bottom for the day. Technology, consumer cyclical, communication service, all did good for this one day. And the week, energy is right on the top 3. And of course, energy for the month. This one day, this is not over. So in general, I think energy is a good sector to trade. So what I have is a spreadsheet. Anybody can build a spreadsheet like this. And went out on Google and found the most popular sectors that people are trading and copied and pasted. These are a copy and paste from the website. And then added a few more. And then I went and used Google Finance function to get the price today, 5 days ago, 15 days of the month. And then plotted the colors here and the change. And we would assume that all green, that's a trend there. And this one's trending, that's oil and gas again. And energy again. And another energy. All the others, technology is not. So it kind of gives me a scope about the trending, whether it's a trend in the stock. But I also think the recession started on January 1st. Actually, it started about November. And the changes that occurred in these ETFs since that date. And then I put that column there. And that's the column I'm using because I think we're in a recession and I'm going to play the recession game. And these are the ETFs that seem to be doing okay during the recession. And these are the bad boys. Now, finance, industrial. And we can see the energy and utilities. Energy and utilities, metals. It's another one I'm going to be looking at this weekend. Copper and metals and lithium. Doing my due diligence for Tuesday. We have an extra day. We're on a 3-day weekend. So the most popular ETF for this is XLE. What is contained in the XLE ETF? Checking out Market Watch using the free version. You have things turned off in it, and you get some ads, but it'll do what I want to do. And here are the holdings. Exxon Mobil for this ETF. That's the one we're talking about. Chevron, that's the other one I just closed out. I've traded Conop, Marathon, Oxy, Valero. So for those of you who don't know what an ETF is, it's a basket full of stocks. And these are the top 10 holdings. An ETF must contain the stocks that it's trying to mirror. This is the energy ETF, XLE, and it contains very good stocks. Be a good starting place for a beginner. Put those on your watch list, all of them. This is Williams Company, WMB. It trades very well with the MACD indicator. And the other thing I did was I took my watch list, cut and pasted, used Google Finance function to build this and fill it out, not typing in anything. Again, the same recession time period, and filtered the stocks that I think are doing well during a recession. I just looked at a TikToker that says that United States Steel Corporation is due for a bump. I thought what he presented was valid. Anyway, these are the energy stocks. These are the ones I'm going to talk about, and they are doing well. And looking over my bad boy watch list, I don't see energy on there anywhere at all. So it looks like you could throw money at energy stocks and nothing will hit the ground. So these are the stocks that we're going to talk about. Back to the spreadsheet. By touching the data, you're learning about your stocks. You have to touch the data. You just can't take somebody's advice off the internet. You have to touch it and feel the data, learn your strategy, and that way you'll win. Trading off of somebody else's singles is not going to teach you anything, and it's a sure way to lose. Going to FinViz, typing the ticker AR. Antero Resources is an oil and gas company. It does business in the United States. And we can see that FinViz draws these nice little lines, and you can see a channel, and the channel is up. Green day yesterday. This is outstanding. This thing doesn't look like it's stopping. FinViz has a target price of $46, $47, and we have a buy rating on it according to FinViz. This is a relatively cheap stock with the target price going up to $47, $3 or $4. There's no PE here, and there's no PEG ratio, so you can't tell if it's overvalued, which probably is, but it's probably not profitable in the last year. Looking down at the statistics, you have a profit here. Yeah, these numbers are negative, and so this company is losing money at the moment. It's been up since the last earnings report by 20%. This is a Zacks article. And they're expected to post positive results for the next quarter, production to be up. And of course, since prices are up, they'll make more money. My cheapie stock. CNX is an oil and gas. And we have little ups and downs. It swings, but it swings nicely in that channel. The target price is $28. This is another cheapie. You have to have some cheapie stocks in your. And $28 is up here somewhere. This is the target prices for one next year or so. When you'd like to have that around 14, 11, 10, only a few months ago. This actually has a hold rating by FinViz. Now, let's get out of the cheapie stocks. This is Chevron. Nice channel up. Only can go higher. Let's see what FinViz says for the target. 178. It's at its target. If they're right. I'm saying they are. I just got out of my trade of Chevron. It does have a buy rating. And the PEG ratio says it's under 1, so it's typically not overvalued. EQT Corporation, it's energy and oil and gas again. Nice trip to the top. $48, $50. Target price is $53. Got about $4 or $5 to go. As a buy recommendation by FinViz. Nice move up. Looks like it wasn't making money this past year, but it probably will this quarter. And the last stock I want to talk about is Exxon Mobil. My 3 indicator strategy probably told me to buy it there, and I probably did, but I've been in and out ever since. I just got in right here with an option play. It's slightly profitable. In other words, I didn't make the big bucks yet, and I only entered it 3 days ago because I knew I was getting out of Chevron. This is trading at 97. Tip rank says it's 96. A recent upgrade in April. Let's dig a little further into Exxon Mobil. Now here's where you have to trade for yourself. The current price is 97 and the target price is 96. So according to FinViz, if you believe the data, we are right at its top. It's not a bargain, according to FinViz. And the analysts have the rating of a neutral, and it just had earnings one of the things I like about TradingView. By the way, my TradingView settings are in the description below. And what I'm trying to do as a swing trader is try to capture these tops and bottoms. And then once I identify the tops and bottoms, to capture the trend in between and make some serious money. According to my strategy, we had a RSI crossover here, a stochastic crossover there, and we had an MACD below the zero and a crossover. When they all curve within a few days of each other, that's a sign to go long, and that's a dividend, by the way. And so for the last few days, we had a long signal, and that long signal is still in effect. This is a profitable company, and this stop works well with my indicators. As you can see, here's the RSI, the stochastic RSI, and the MACD, and they all curved and would have predicted that run very nicely. So there's another tool out there. It's called the Options AI. And what you can do is you can type in your symbol. Let's do that. Exxon Mobil, again, trading at 79. And these are the expected moves for the next 30 days, which is expected about 5%. And for the next 3 months, we expect the move to be around 10%, 10.6%. You can do this with options, but this expected move is very, very helpful. And it uses the option volume, the volatility, the time, days left in the trade, time value, compute a percentage. I used to do it by hand, but it takes a lot of time to look it up on the, each stock on the options and then calculate it. This is just a lot easier. And so because of the volatility in the market, I'm going 3 months out, but most of my option trades. But just I'm using this to figure that this stock, Exxon Mobil, should move 10% either way, but I don't know which way, in the next next 3 months. So with that knowledge, it's going to move 10.6% in the next 90 days. And the high strike, I'm thinking it's going to move up because I'm optimistic on energy by 10 or 11, by 107 or 108. 107, 108 is there, maybe a little lower. And the other direction is 87. So is oil and energy going to move up or down in the next 90 days? If it's going to move down, what's going to change that? Well, a peace in the Ukraine might do it. Some new regulations in the United States might do it. Inflation ending might do it. I don't see those things happen, and I think it's going up this way. And if you did that, if you expected it to go that way, and you wanted to invest $1,000, take a risk, invest $1,000, you would go ahead and get $106, which would give you a return of about 10%, or an APR of 42%. You'd make $106 if it gets to there. That's my expected value. Using options, investing only $500. I like $500 because I can have blocks. And when I add more, scale in, I have those blocks of 500. You get the same $100. So investing half of what you would have up here, you get the same result. I'd rather invest half. But how do you do that? Is there a way to do that? I say there's many different ways of skinning the cat. I'm just going to show you one. Using another free tool called Option Strat, I like free, and typing in the symbol and choosing a bull put spread, which is an option strategy that says that you're positive. I like this strategy. I also like the broken wing strategy. Going out to September, which is a little more than 90 days. It's 112. And the stock is trading at 98 right here. And we think it's going to go up into it. So we put our short strike at 100 and we're buying at 97.50, which gives us a credit of $125. That's in our pocket right away. The margin that's required to do this trade is $250. Now I want to spend $500, and our max loss is about the same as our net credit. As long as this trade stays above 98.75, which is not too far off, we'll win something. And this is at expiration, though. You can win the whole enchilada. We think it's going to go 10% up, and this is our loss line, and this is our win line. So we're hoping to win about $50 and losing about 50 bucks. Win and lose 50 bucks. This is our playing field in here somewhere. And hopefully, you know, if the trade is not going your way, you can get out much earlier. So that's $50. And so if I double this, that gives me my 100 bucks. So I'm risking or investing $500 to make that, but my max loss is only really $250. Okay, understand? Because I'm already credited with this, or twice that. So the max I'm going to really lose is $250. Losing $250 or making $250 versus $100 in my pocket, the profit, which we're our goal, gives us it's 25%, which fits our criteria. Staying above 99, 98.75. This fits the bill. So as long as it stays above 98 in the next 3 months, we have a winner on our hands. But we could take profit early at around $100 if we invested $500, which means, and it's actually better than that, but just using round figures because things never go your way. So it's up to you. Invest $1,000, which you can buy about 10 shares, and you'll make 100, or investing 500, half that, and make the same 100. That's what I do. I hope that explains it. I'm adding more to Exxon Mobil because I see no change in conditions. Let me summarize. I think energy will stay hot this summer, and we'll see nothing but increased gas and oil prices, inflation, and I think we're in a recession. I've showed you my energy sector watch list. I have some cheapies on there, and I like the ETF, XLE. My current trade list is Exxon Mobil. I'm in that. I just closed out Chevron, and I want to add more to Exxon. I'm suggesting that you have your own energy watch list. Maybe put some green stocks on there. I have oil and gas, so that might be a weak. Please leave your comments below. See if I should put some green stocks. There is some green stocks on my watch list. I don't play them much, though. And if you're trading in a sector that's hot, then you increase the probability that you'll win more often than you lose. Cheapy, and two expensive ones, Chevron and Exxon Mobil. I'm a cheap guy. I put some cheap ones and expensive ones, but I prefer the expensive ones. And I showed you the expected value of trading Exxon Mobil versus actually buying it or shorting the stock. Do you have an energy watch list? Are you trading energy? Do you think energy will go up or down? I'd like to know. Please comment below. Well, that's all I have for you. Before we go, I want to remind you that the Stock Planner channel is an education channel. We're sharing our ideas. We share those ideas on our free Discord. It's listed out there under Stock Planner, Stock.Planner. And in there you'll find my watch list of lots of stocks and the trends. And with that, you could be a good starting point to see and validate your own trading strategy. Also, I have a trades list using the MACD, the RSI, and the stochastic RSI. Again, a good starter to validate whether your indicators are showing the same thing. And on the Discord, that free Discord, I have my trading view settings. I also want to encourage you to join Patreon. And out there, I have a 3-indicator strategy with trade list. Each day, it produces this 3 times a day, but it tells you when to go in. Cat, there's copper, and it says scale in on copper. It's telling to get out of EQT, which I'm not in. We just talked about that. This is today. And all the other ones it's recommending scaling in Kroger. I am in Kroger. And you got a running total with profit and profit percentages and cumulative profit. A lot of tools out there. And this is only to join. It's only to cost you the price of a cup of coffee if you want to support the channel. Like what you're doing? Happy trading. We'll catch you on the flip.